but I think that it is a good time to jump into introductions. Kyle will be joining us shortly. So I will start with myself. I'm Jackson Blau. I'm community manager here at Security Token Market. And this month, I have had the opportunity to interview the two guys I have next to me on this stage, Fran Black and Klaus Scanning. Both of them have been a part of our STM community for a while. We've had the chance of working with both of them in various facets on the STM and our sister company STA's side. And these are two guys that we truly just value more than anything. The perspective that they bring to the tokenization space is unmatched in the projects that they've been able to work on, are bringing new functionalities and newfound people into the space that we are absolutely here to help and here to put a microphone on. So I think that we can start out with our first community member, Tron. Tron, could you give us a little bit of an intro on yourself?
Sure. First, thanks STM for letting us have this platform to talk about projects and tokenization. So I was lucky enough to be in the right place at the right time to be involved in a project, Ravencoin, that was funded by Medici Ventures, which was a wholly owned subsidiary of Overstock. It's gone now. It had about 80 people, about 60 developers that were helping various projects, mostly projects that were actual companies that Medici Ventures had invested in, all blockchain projects. Ravencoin was an outlier in that. And so because of that, Ravencoin's been kind of shifted out to Foundation, just to kind of help monitor it. But I was in the right place at the right time to be involved in this project that basically took the code from Bitcoin and then added the ability to create your own tokens and some features. My background, I was big into blockchain at the time. That's why I was at Medici Ventures. I was helping other blockchain companies. I have a computer science degree, I have an MBA, and I had worked on other blockchain related projects kind of prior to that, and then also under Medici, but also prior to Medici. So that's probably enough.
Yeah, thank you. That's a perfect introduction, Tron, and it gives a little bit of insight into how we all have ended up in the same community together. As Tron mentioned, Ravencoin is a Bitcoin fork that is specifically trying to make a robust ecosystem for digital assets. And we at STM are everything digital assets, and so obviously there's a big overlap here. And so if you guys have noticed, our moderator Kyle has jumped on. How are you, Kyle? Everything good?
What up? Thanks everybody for joining us. Really appreciate it. Excited to dive into it. Tron, good to talk to you again. And Klaus, good to speak with you as well. Thanks for joining us today.
Great. And so now that Kyle is here, let's jump into Klaus's introduction really quick. Klaus, could you give us a quick introduction on yourself?
Yeah, a great pleasure to be here today, and nice platform, and of course it's a pleasure also as a close partner of STM and STA to participate here. My background is actually as a researcher. Originally I have a PhD in computer science with a specialization in AI, but I left academia quite soon after getting my PhD and went into business and started several companies. In fact, the first one also being in the AI space, where I made my exit something like 6 or 7 years ago. And then I sort of slowly went into the blockchain space after that. I bought a Bitcoin back in 2014 and sort of got a little bit interested in the space, but didn't actually join it full time until 2017, where I, together with two other persons, founded another blockchain-based company, which was a kind of startup incubator on the blockchain, where the idea was to pay anyone participating in a startup project with tokenized shares in the project, right, as a kind of bootstrap mechanism. So I think the idea was actually not so good in itself. We couldn't really get it off the ground, but it gave us the opportunity to see sort of the state of the security token space about 5 years ago, which was pretty poor. There were no really good solutions at the time, and we thought that we could do better, and we could quite easily and quite quickly actually create some solutions for tokenization. So we made a pivot and went in that direction instead. And of course, it wasn't so easy to create the solutions. It took a long time. It took several years actually, but it got us started, I think, among a few of the first companies in the space actually. And of course, today we are basically a white label provider of tokenization software, tokenization infrastructure, primarily for the real estate space. Also working on Ravencoin, for instance, but also on Ethereum and Polymesh in the future. So thanks for being here.
Yeah, that is incredible, Klaus. All the different background that you have in the tokenization space, and seriously, DigiShares is one of a close partner of us on both the STM and STA side, and we love the solutions that you're able to provide. And so thank you for joining us today. Kyle, I know that we have a list of questions that we have sent both of our featured community members of the month. And I know that these are just pretty simple, fun, high-level questions that we'll use as a base. But if we want to dive into those, I think this would now be a good time. And yeah, if anyone in the crowd ever has questions, we will be doing a Q&A or a questions section at the end. Feel free to drop your questions in the general chat here. I will send a message in it right now, and we will get to those at the end. Thank you guys very much for joining us, and let's get into it.
Cool.
Hey, Kyle, I don't know if it's just on my end, but you're pretty choppy.
Yeah, it's not just on your end.
Let me take a step back and see if maybe you can hear me better.
That's better. That's better.
Yeah, that's
better
already
now?
better. Yeah, it's already better.
Perfect. So, blockchain tech or securities, Tron, where do you really see this adding the most value to this market? Obviously, it's a $200-300 trillion market with regards to real estate, and then potentially 100 or more in equities, and then certainly not even factoring in debt and some of these other pieces. Where do you really see the true benefits for the blockchain industry with regards to securities?
Yeah, so I think the biggest thing would be efficiency. The idea that you could tokenize it. I mean, there's a confluence of events that's happened. One is that we've got, you have to be, a multi-million-dollar company before you would consider doing an IPO, and that's the only thing that would allow non-accredited investors in the U.S. to invest is after the IPO. So kind of all the benefit goes to kind of the early angel and VC states. And I think the efficiency of tokenization combined with some of the law changes, there needs to be more, but some of the law changes, and some of the law changes include the ability for accredited you can now get accredited by taking a test, which is great. So instead of having to get to $1 million net worth, which is a pretty big climb for most people, you can take a test, which probably anyone with enough effort can do. So that was one thing that changed. There was the Jobs Act of 2012, which took the SEC multiple years before anything happened on that. So it took them till at least 2015, 2016. But the changes that came out of that were Reg CF, which allows platforms to there's some regulatory stuff around it, meaning the offering has to be done from a broker dealer's website and things like that. And this is all kind of Klaus's space, but these things kind of came together. But it allows anyone to invest in the project, and so that allows other people to be involved that haven't met that criteria of $200,000 salaries and $1 million net worth. So the efficiency. And then the efficiency of tokenization, the idea that very, very easily, quite literally on the tech side, it's near trivial to create a token. And I think if they fix the rules even more, we can also see dividends come backwards through the technology. So if you have shares of of real estate, even single building that's profit generating, from a technical perspective, it's fairly easy to pay the rewards or dividends from that building back. The legal still needs some work, but that efficiency allows anyone to basically have a diversified portfolio of potentially of $50 of worth of real estate, or worth of value in a building, or $100, but across multiple buildings, so that could be distributed across. And the efficiency of blockchains would allow the payments and returns from these investments to flow back to the individual with just incredible efficiency. So anyway, that's kind of where I see it going. Still need a little bit of work on the legal side, but the tech's mostly there.
Right. That makes a lot of sense. And I think maybe a follow-up question I would ask to you is, I love that you brought up the Reg CF. Certainly, I think that our audience is familiar with that because STM is going through that process now and it's been successful. And then also, the interesting thing is from a accreditation perspective, due to some of the innovations at T0 that I know you have some experience working with their team, as well as a bunch of other brokers now that have done this, there is, I think that the Rule 144 exemption is fascinating in terms of creating access for retail investors that before only accredited were able to invest, right, or only be able to get access. Whereas now, with Rule 144 on the secondary markets, now you can start to see issuers like Curzio that could only have accredited investors participate in that primary offering. Now they're listed in live trading for retail as well, which has been pretty cool to see. So, I think that there are some different pieces here. And so the question that, in terms of follow-up there is, what drew you to work and develop and dedicate your time to the Ravencoin blockchain as opposed to some of the other solutions that are offered in the market?
Yeah. So the pathway that I ended up getting to Ravencoin was I was working as a consultant for a blockchain company and was in the Netherlands when Patrick Byrne gave a keynote talk, and he was there just because Overstock he made it so Overstock would take Bitcoin. It was one of the first public companies to do that. So he got popular in the crypto space. He was in the Netherlands giving a keynote speech, and during the Q&A of that, he said, "You know what? I'd really like to do a crypto equity, parallel crypto equity to Overstock." Well, Overstock was already listed on NASDAQ, and so a lot of that legal was sorted out. So now it was just kind of the tokenization and the trading of that token that was the issue. And I said, "That's really cool. I want to be involved in that." And they just happened to be 10 miles from my home. So it took a little while, but eventually I was on that team. I actually was a little early, before they had kind of formed a team, and then eventually was on the team. And so I was working for T0 initially when it was still, it was like 5 people, just kind of working on different things. So we issued the first bond offering with a New York bank. And a lot of this was experimental stuff. It was being done on Counterparty, which was a layer 2 on top of Bitcoin. And so I kind of understood that. I ultimately kind of left there and went to work for a company in Hong Kong. And they were doing on that, I specifically worked on an Explorer for open assets, which is another tokenization platform on top of Bitcoin. And so I went back to Overstock / Medici. Medici had been formed and was kind of the primary holder of T0 stock. And so I worked for that, and they invested in a whole bunch of other things, companies specifically, blockchain companies specifically. And then one of the people who was on the board of that of Medici was Bruce Fenton, and he had this idea of doing a based on Bitcoin project. but being able to do tokenization. And there was already several layer twos on top of Bitcoin that did that, including counterparty, master coin, open assets. And I was familiar with all of them. We worked with all of them. I said that would be really good because we ran into some real problems with Bitcoin at the time. In kind of that 2015 timeframe, we had $50 fees for a transaction. Also, anything you tokenized, a little bit of Bitcoin had to go with every token, like every fraction of a token. Otherwise, Bitcoin would ignore the transaction, or could be pruned out of the network, which would be really bad. And so those are some of the clunkiness things that I thought, well, if it was integrated, it would work well. So between kind of Bruce, myself, we kind of figured out kind of what Ravencoin would look like, and then we built it in phases. And so that's kind of how I ended up working on Ravencoin.
Very, very cool. We know there's a super active community from the Ravencoin perspective, and thanks to everybody that's here in the crowd. I see Jake and some others are here. Leon is here. So thank you to everybody that participated and is joining here to chat. We will have a portion later in the show today. Maybe Jackson can see if anybody has any questions that in the last 10 minutes or so we can ask any user questions for anybody. But moving our attention over to Klaus. Klaus, thanks again for joining us, man. We have worked a lot with DigiShares, and I know the hard work that you and your team have been putting in and day out in this industry. You're definitely one of the absolute OG veterans of this industry. And so because of that, you've seen how this industry itself has grown to what Tron had been saying earlier with regards to some of the changes technologically, to some of the changes from a regulation perspective. I know that you don't focus quite as much on US regulation, but from a securities perspective internationally, as well as from the tokenization piece of it, how have you seen this industry grow, and where do you think it's heading moving forward?
Yeah, that's a great question. I wish I knew. So we are actually focusing a lot on the US. We actually re-domiciling to the US right now. The US is our key market, I would say, or our biggest market. So we are actually quite familiar with US regulation, but of course we are global, right? I'm based in Denmark myself, and we have a German department as well, and we are sort of I think we have clients in 20 countries or something like that, and I would say things are definitely developing in the right direction. I would say the first couple of years we operated, maybe 2018 and 2019, there was pretty much no business or no interest in what we were doing. But it started opening up, I think, in 2020. And I think it was primarily because regulation started to recognize what we were doing and open up for it. And legal firms also started to understand it and to actually be able to support tokenization projects without charging a massive fortune. And it's still going that way. I would say we are the US still has the most favorable jurisdiction, I would say, for tokenization of any country in the world. In Europe, where I'm based personally, it's very fragmented, and each country has its own regulation, and I would say relatively few European countries support tokenization as well as the US does. In some countries, such as Germany, for instance, you can't tokenize shares. In other countries, you have to notarize any transfer of a tokenized share, which makes it extremely difficult to digitize the process. In other countries, such as the UK and Ireland, you have to pay a stamp duty tax every time you make a transfer or trade of a share, and you have to be a registered taxpayer to pay that. So that also makes it extremely difficult to digitize the process. So it's not easy, but regulation is coming across Europe that will sort of align the different countries and hopefully make it easier generally to operate in Europe. In the meantime, we can tokenize debt and revenue shares and other things, so there are ways around it. In Asia, it's the same picture we see with different regulation in each country, and actually it's even worse than in Europe, because in most Asian countries, you still have to speak to the the regulator and get some kind of approval to run your project, or even be in the sandbox to carry out a project. So it's really quite difficult, I would say. And so in Asia, we are sort of mostly working out of Singapore and Australia, actually, as Louis here can tell. But yeah.
Thank you for that. That's actually fascinating insight from the international perspective, because for the most part, I think a lot of people from the crypto space see the US as a hostile environment to do these offerings, to work with crypto, to do innovation from a digital asset perspective. We've always been aligned with you that it's actually not the case, right? Because it has the most definition. Actually, while it can be cumbersome to some degree, you at least know the rules you need to go through, right? And we're building smart contract technology specifically to execute tasks that are well defined, right? So although there are rules and things that may be annoying, it's actually decently fitting when you have a smart contract system, because you only need to build it once and then it applies to the entire ecosystem. Whereas, to your point, it can get really complicated in Europe, in other jurisdictions, because of the fact that there's so much variance in how these things work and how it goes. And so I think that's a really interesting point. And so, as to that point, do you see that trend continuing, where the US will continue its economic dominance even in this digital space because of the fact that it has this head start? Or do you see the opportunity being that once these international jurisdictions kind of get it together, then they're really going to present a new opportunity for those markets? What are your thoughts, Klaus?
I think from our perspective, we are going to bet on the US being the leading market, at least for the next couple of years. I think it's going to take at least two or more years for Europe and Asia to catch up. But there is one way they can catch up faster, maybe, and that is if they start regulating crypto. We see that a bit already in different places where crypto is getting regulated to the degree that it starts looking like it's similar to the security token space or securities regulation. And then we will see that ordinary crypto firms, utility token firms, will have to be regulated in a similar way as security token firms. And utility tokens and normal crypto tokens will be considered as almost similar to securities in certain countries. And that will give us, I think, a big advantage. So every one of us that's working in the security token space has a head start, I would say, as compared to everyone that's working with utility tokens or normal crypto, because they will have to be equally regulated as we are eventually, and will have to start whitelisting all the wallets and so forth. So that should be good for our industry, I think.
That makes total sense. I think that's a really interesting perspective. And so I'm going to ask you one more follow-up before maybe I pass it back to Tron to hear some of his thoughts on a couple other questions I have, or if he has anything to add here. Tron, certainly keep that in mind as we're answering. Well, how do you think it impacts the crypto and security token industries, and if a lot of these assets begin getting considered securities? We've seen this being thrown around by the SEC chairman, Gary Gensler. We've seen other international countries potentially looking to regulate digital assets, and depending on how far they go in considering them a new asset class, or are they going to consider them commodities, or are they considered securities? How do you think that will be impacted? Do you see that as being a real possibility? And if so, what might that look like? If not, what do you see being the more realistic outcome? Obviously, you can't predict the future, but I want to hear just some of your perspectives around. Do you feel that a lot of these assets are securities, and if so, what does that mean?
Yeah, I think to some degree, a lot of utility tokens will be considered securities in the future. Maybe not so much in Europe, maybe more in the US, possibly. But I would say, in any case, even with utility tokens, normal crypto tokens, there will be a requirement in the future for wallets to be whitelisted, for transactions to be auditable to various degrees, and for, we say, the entire, and for AML to be applied to crypto transactions and so on. So we will get, you could say, a similar degree of regulatory pressure and scrutiny on the utility token space as we have on the security token space. So they will be similarly regulated. So we are forced to work in a permissioned environment generally where all the tokens are whitelisted and so on, but it will be the same for the utility token space in a couple of years. So we are, I think for us in the industry here, it'll be a huge advantage because we're prepared for it. But of course, for the utility or the overall crypto space, it'll be a difficult transition to go through, and of course, it will put a damp on the entire industry, I think. But eventually, we will emerge, hopefully, a lot stronger.
Great answer. Great answer. I think that makes total sense to me. And I kick it back to Tron. Tron, you're somebody that has a unique perspective because you've spent a lot of time working with a alternative trading system here in the United States, and you spend a lot of time evangelizing with a native utility token, one that is not a security by I think a lot of the Ravencoin definitions and standards. Can you kind of explain your perspective on the industry?
Yeah. So I think treating cryptocurrency, commodity-based cryptocurrency, like securities would be a massive step backwards. I think that's. I think it's. I just don't think it's a good idea. There's a pretty bright, clean line between commodity token, one where if you own it and it, and there's markets out there and they go up and down based on supply and demand, that nobody has to do anything, right? There's nobody tending to a piece of real estate or something that's sending you the or building the business that you have a piece of equity in, or paying off the loan, or doing anything like that. There is nobody behind it. It's quite literally like like a piece of gold or a single piece of art that could go up in value. Distinguishing that from maybe a company that has a bunch of art that's renting it out to a museum, right? That requires people to work on it. There's a pretty bright, clean line between those two different things. And I think the direction that the U.S. is going right now, at least under the Lummis proposal, is the right one, which is to distinguish those separately and to say this one should be, meaning the commodity-based one, the one that's like Bitcoin or Raven, Litecoin, and some others. You get a little bit of overlap on some of the ones that maybe were issued like a security, like an EOS or a Tezos and things like that sold them initially. But to basically say that the commodity-based ones, the Bitcoin-like ones, the Raven-like ones, to be regulated by the CFTC seems like a good idea. Now, the CFTC in the U.S. was originally set up for commodities like wheat, grain, and so I've actually talked to lawyers in that space, and they said one of the problems they had, especially in the early days, was all of their rules are about like, hey, if this is held by someone else and something happens, like it burns up, like a silo full of grain burns up. Their rules and regulations are around getting the farmer back his money within 24 hours. And so that just doesn't work. Some of the rules around that, are kind of confusing when you try to apply that to a digital custodian of a digital asset, and potentially digital asset that kind of can't get burned up in a fire, but could get stolen. And how do you return that? And things like that. But I do think they should be treated separately. I think there's a pretty bright line distinction between the two. And it also, one of the things that the SEC can prevent is somebody saying, kind of what they did originally, like people selling, bogus certificates to railroad stock or to a railroad that maybe didn't exist. You can have fraud in that area. It's like they're getting a certificate, they have this piece of paper, the piece of paper is worthless. And in the token market, you can have that same kind of thing. Like, here's a token, and it's for this building, that we have that you can't see. And if there's no regulation around there, you can get fraudsters kind of selling bogus certificates, and can do that quickly and easily because they're digital and they're easy to create and things like that. But I do think we should have very bright line separation between them and treat them very differently as far as regulation. One should be treated a lot like cash, and the other one treated, kind of the way securities are now.
That's a really great answer, and I think it really points to the fact that we're really just building an economy that's digitally native, right? In the same way that your securities will belong on chain alongside your NFTs that are your art and membership access and all the different things that trophies, things that come with NFTs, play to earn kind of stuff. You're going to have your network tokens, some of the things that do power underlying networks that are not securities, to your point. And then you're going to have all of these other assets, your stable coins, right? Just because you're not investing in the crypto space doesn't mean that you don't want that cash to still exist in that entire economy, in that network. And so in the same way, building all these things together feels like it makes total sense that securities are going to be on this, through these same networks, but then again, there is kind of an existence for other types of assets, right? Governance tokens for a DAO may not be securities, right? But you're, at the same time, you're going to want to have your DAO and your security on the same underlying technology for commerce and transaction. So that's really where I think that, to the point that you're making, it just makes total sense to build all of these networks and ecosystems together, which is really tremendous. So going back to you, Tron, I want to hear a little bit more about the role of community and how that plays in building these things, because whether it's NFTs, whether it's securities, whether it's neither, and it's a commodity, or anything in between, we really see how Web3 has opened up this door to involve communities and the average person engage with your power users in a way that's much, much different and much, much more effective than in the traditional markets, right? Yeah, shareholder votes exist with public companies, but like nobody actually does it. It doesn't actually lead to any decisive change. Whereas in the Web3 markets, the community's opinions around things really do seem to have a significant effect on business operations from head to toe, due to the additional transparency and due to these organic communities. So how have you seen that impact your businesses and what you've been building with Ravencoin and some of the other projects you're working on? How important is community to this new economy?
Yeah, well, in the crypto space, community is everything. There was a book called Crypto Assets by Chris Berniski and Jack Tatar, and it was a good book. It was written in I think it was released in 2013, and Chris worked for ARK Investments. We're kind of all familiar with ARK Investments now, because of the investments in Tesla and things like that. But they were looking at crypto, but it was difficult to value the different crypto, right? Especially if you have something that's like Bitcoin and Litecoin, almost exactly the same code base, right? So it's not the code, because they were dramatically different, prices and values being valued by the market. And so they were kind of asked to kind of analyze this and say, how do you value a cryptocurrency? You can't use discounted cash flows and things like that that you could in the traditional markets. And so they went through and kind of like looked at this. And one of the big components of one of the things that made Bitcoin more valuable than Litecoin was the community, the size of the community, and things like that. I mean, there was some others, brand awareness and things like that, but it kind of shows the power of community. And then as far as the value to Ravencoin, which didn't start with a lot of money, because we didn't there was an intentionality of not making it have any kind of security aspect, meaning there was no Raven sold initially, there was no pre-mine, there was no dev set aside, a bucket of funds, things like that. So community is everything for that. Some of the other projects can do grants from that original funds, but they also have legal overhang, right? Meaning the SEC probably will go to them to kind of, depending on the outcome, potentially depending on the outcome of like the Ripple case and things like that, whether they're strengthened or weakened, the SEC in that case. But Ravencoin's in much better shape that way, but depends on the community for word of mouth, for telling people, for building projects, for building layer twos, for doing all these things that that bucket of funds can't provide. And so it is one of the projects that mirrors a lot like Bitcoin. It's got a lot more passion in it, a lot more people that are for it and passionate about it because of the way it was launched, because it's a kind of a for the people type project. But so that's how I think about community.
Totally, totally. I think that it's such a tool to be weaponized. I think we're seeing a lot of the Web2 marketing strategies really not working very well with these Web3 communities. The conversions through traditional advertising just doesn't quite have the same pull that it used to. And this idea of building organic communities has really, I think, been a more true version of how this stuff grows, and couldn't agree more. So to pass it back to Klaus, I wanted to hear a little bit more about DigiShares, maybe explain your process, how you're working with clients, what's going on from your perspective in this space. Do you see, how do you see the role of community engagement playing throughout that process and building liquidity and building a brand for an issuer? Would love to just kind of hear any of your thoughts around these topics.
Yeah, so we as a company have a community around what we are doing, and have been building it up over the last 4 years to a good size now. But we've sort of been using traditional marketing channels actually to build it up. The way we work is that, of course, we provide tokenization infrastructure to issuers, and we have more than 100 of those working with our platform now, and each one of them also, in many cases, need to build up a community in order to launch their project. And of course, we can help each other, and we can help them with our community, and they can help us as well. So there's a network effect there, I would say, that helps it grow for all of us. A lot of people believe that tokenization is a magic way to raise funding for their project, but in reality, it's not, as everyone in the industry will, all the industry insiders will know. If you tokenize an asset, it's not easier to sell the tokens that it would be to sell the untokenized underlying asset. Tokenization itself is a way to make transactions more efficient, to sort of gain value from the crypto ecosystem, and possibly tap into new types of investors, like crypto investors and retail investors. And then finally, of course, it's a way to make assets more liquid, and in that way possibly also increase their value to some degree. But tokenization in itself is not a magical way to raise funding. So we have a lot of clients coming to us having this belief, but the normal message that we have for them is actually that they should try to build a community around their project, or to sort of to try normal marketing methods, right? So community is really everything. I fully agree with Tron, and it's also extremely important, I would say, for us and for our clients, our white label partners. They can't just rely on the fact that they tokenize as being making it easier for them to raise funding and so on. They have to build a community around the project. And actually, there's a lot of real estate projects where this makes sense, that are sort of community oriented, where you could say there are users that could gain some kind of value from owning tokens in the property project, that could give other kinds of rights, users' rights, ownership rights, voting rights, and so on the underlying project. It could be for large residential buildings, for resorts, hotels, and so on. We always recommend our clients to build some kind of community involvement into the project, because it just makes it easier to sell the tokens and to get liquidity in the tokens and so on. Finally, I would just add also that, of course, I think it's important to us also to explain that tokenization is not just a technology used for fundraising for different projects. It's much more than that, and in fact, that may be the least interesting aspect of it. It's much more interesting that it can be used to digitize and automate many processes, and to fractionalize, and to make an asset tradable quite easily, right? That's more important. So yeah, thank you.
Awesome. Very, very cool. I think that all those points are really relevant. And This has been a fantastic conversation. Again, I want to thank everybody that's here. We've got over 20 in the audience, people that are tuning in. These are from our community on Discord. I know that Discord is kind of this new thing for a lot of different people, but it's just a really effective way, I think, to categorize those message boards, make it a little bit more social than Slack or something like that. And these kind of chats we can do and live community engagement, obviously all the amazing bots and programs that we can build into it to just make it really efficient. Major shout outs to Jackson Blau for organizing this. He's our community manager, crushing it, doing amazing work. Thanks for organizing everybody together here, Jackson. Shout out to Denise, Turphead Rick for setting up a lot of our bots, organizing the channel, doing such a great job, kind of really with the underlying technical stuff there. He's a wizard when it comes to building communities. So shout out to those guys. Make sure to show them some love. I am going to have to run here. Jackson is going to take it over and talk about some Q&A that he's got from the community. But I mean, Klaus and Tron, thank you guys so much for talking with me today. I feel like this conversation was awesome. Again, the conversation is not ending, but unfortunately I have another thing to go to. So thanks for everybody for tuning in. Tron and Klaus, thanks again for participating.
Thanks, Kyle.
Thank you. Bye-bye.
And yeah, as Kyle mentioned, I think it would now be a good time to move into our community questions. We currently have 4 from the audience. And so our first one is from Undine. And this is a question for Tron, I believe. And he's asked, will Ravencoin connect to Fireblocks? Undine, if Tron, if that's enough for you to answer, please go ahead. But Undine, if you'd like to come up and ask your question yourself, I'd be happy to let you come onto the stage if you raise your hand.
So I do understand the question. So Fireblocks is a custodian. I have talked to them. This was a while back, probably. It's either pre-COVID or just after COVID started, so probably 2020. So Fireblocks is a custodian that allows, basically there's different ones. BitGo's another one that allows other entities to use Fireblocks or BitGo or Prime Trust as a custodian. And then they would hold. They're the ones that would securely hold the Raven or the Ravencoin assets, and that way the platforms like T0 or FTX or something like that doesn't have that burden. It kind of separates the duties. I have talked to them. The reason that we're not on there is at least at the time when we were talking to them, they were just backlogged. The companies that are doing custodianship are just really, really busy, basically trying to add platforms. And so that's the reason. I don't believe we're on Fireblock, but there's no reason that we shouldn't be. It's almost identical to securing Bitcoin or Litecoin or one of those.
Well, thank you for that answer, Tron and Undine. I think that we have answered that question. As Tron has said, not currently on Fireblocks due to their backlog, but soon to come, hopefully, fingers crossed. Our next question is not the same, but somewhat similar in topic, not necessarily. It's coming from BrickBC, and this question is again for you, Tron. BrickBC has asked us if you can share the future scalability capacity of Ravencoin blockchain to deal with the massive wave of tokenized real estate coming onto the Ravencoin blockchain. So I think that BrickBC would just like to hear a little bit of talks about Ravencoin's capacity to scale.
Gotcha. So the capacity right now is about 20x that of Bitcoin. The scaling for this, I mean, if that becomes a problem, it's not anywhere near a problem. We would probably start looking at it. There's a couple of options that are available to us. One is to increase the block size, right? So that we can only do that within limits, and the limits we've set are we're very, very conservative. Kind of informed by some of the work by Emin Gunserer and others that kind of analyze the speed of networks and things like that. And block size and block time are kind of like almost the same thing. Like you can speed up the blocks or you can make the blocks bigger, but those two are kind of working in the space. So you can't really do both to a large degree. The other thing that is possible, has been discussed, is adding Lightning. That requires modification just to make sure that you don't have signature modification where while it's in the mempool, signature can be ripped off, put back on in a different format, which gives a different hash. And that's the thing that SegWit fixed for Bitcoin. Anyway, kind of all techie things, but Lightning is also possible because we are a UTXO model. So Lightning is possible both for Raven and for assets issued on top of Bitcoin. Probably couldn't do issuances on Lightning, but we should be able to do Lightning for transfers. So those are the options. Scaling is really not a big problem right now. The other thing to be aware of is a lot of the trading and things like that would happen for, let's say, real estate would be done off chain, right? It would be done in an ATS like a T0, like an ABE, something like that, where the trading happens there, and it's really just the deposits and withdrawals that would need to be on chain, and that would just be a transfer.
Yep, I completely agree with you there, and Ravencoin sounds like it's in a very good position right now to scale. It is not at anywhere near capacity is what it sounds like, and is ready for the wave of tokenized real estate that BrickBC and other tokenizers around the world are helping to bring to the Ravencoin blockchain. For those of you that have joined us a little later, BrickBC was actually one of our featured community members of the last month, and he is in Australia tokenizing residential real estate. He's actually in the process of doing a new property right now called Token Dolphin. Please be sure to check that out when you have the chance. But moving into our next question, again from BrickBC, this one is for Klaus. He wanted to ask, what is the future of blockchains that DigiShares is adding to their platform offering for their clients? I know
Great
DigiShares.
Yeah.
Sorry, I'll let you take it away. I know that DigiShares already offers Ravencoin, which is a great step, and I'm sure that
should be enough, right?
Yes, it should. But I'd love to also hear what blockchains you have worked with and will be working with in the future.
Yeah, we are blockchain agnostic, right? So we have an API layer that separates the blockchain part from the rest of the application. So it's relatively easy for us to switch blockchain, even though sometimes they are vastly different, I would say. So mostly we've been on Ethereum compatible chains like Ethereum, Polygon, and Binance Smart Chain. But as you know, we also support Ravencoin, which is a very different blockchain, and was actually a major implementation effort for us to support it. But we support it now, and we are extremely pleased to be part of the community. There is one other chain that we are working quite hard to support now, and that's Polymesh, which is the forthcoming blockchain from Polymath, the creators of ESE 1400, the most widely used security token standard for Ethereum. They've been working on this for a few years, and the idea is to create a specialized permissioned blockchain for security tokens that will be sort of bank level security, institutional level security, and also have sort of built-in required KYC and whitelisting simply as part of the blockchain as a native operation. So we're working on supporting that now, and expect to have it implemented within a couple of months. But it's not just us. So generally, when we evaluate to support a chain, there really should be some kind of community around it. I would say there should be some kind of adoption. There should also be interest from issuers, tokenizers, and so on. But there should also be preferably some kind of stablecoin or means of payment. There should be support from custodians, exchanges, and so on, because otherwise it's difficult for the issuers to get the full value of their project. And that's not yet the case with Polymesh, but we expect it to come in the future.
Yeah, that all sounds great, Klaus. Thank you for that. That's super valuable insight into what you guys at DigiShares are looking for within the blockchains that you're already using and are looking to use in the future. And it's very obvious why you guys and Ravencoin are a good match, almost a match made in heaven. based off of what you said about community, that it sounds truly like a match made in heaven. We have another question for you, Klaus, and we would love to get an update on the launch of the real estate exchange, the secondary market sister company to DigiShares that is focusing primarily on real estate tokenization. We would love to get an update on anything you can give us with in regards to that company.
You're hitting on a sore point. We are the plan that we have been working according to was to build the exchange on top of balancer technology. So basically use balancers infrastructure for liquidity pools and automated market makers. They have been working now for some time on developing a new type of liquidity pool where we have much more control over the trading, and we have so-called circuit breakers to stop the trading if it deviates too far away from the underlying appraised value of the property, for instance, and sort of gives us much more security and control over the trading. But this technology has just been delayed with Balancer, I think partly due to the crypto crisis we have seen lately, where Balancer has sort of had to focus much more on security. Due to that, the stuff that we were waiting on from their side has been delayed quite a bit, at least 3, 4, 5 months. So that's pushing the project out. We're actually looking at other ways to get to market now and potentially white labeling someone else's platform, but I still see the Balancer technology as the market leading technology that will give eventually the best platform. But yeah, now I would say launch is at least December probably, as we're looking at it. So it's not easy. It's quite complicated, I would say, both on the technical side but also on the legal side, which it took us a long time to find a suitable legal framework to launch something that is not really an ATS or an MTF in Europe, but more like a peer-to-peer trading tool similar to some kind of mix of an OTC and a real exchange. So most regulation don't really recognize a concept like a liquidity pool. That doesn't make it easier. So yeah, it's postponed.
Well, thank you for the update on that, Klaus. Although we are sad to hear the unfortunate news, we know that you guys are working hard and, like you said, working on either bringing this balancer functionality to life and working very hard on that, or looking for alternative solutions. And we know that whatever product you're ready to bring to market is going to be fantastic. And so you still have our attention. It's no matter how long it takes. We know things take a while to build in this industry, whether it be through regulatory issues or just like you're saying, technology issues. We know stuff takes a while. And so we're patient. We're all here for the ride, and no one's going anywhere. We're super excited for what Real Estate Exchange is building. And we know with DigiShares at its side, it's going to be beyond impressive. So we're very excited for what's to come. And with that, I have one more question for you. Who is your favorite Australian client?
Great question. Who could it be other than Lewis?
I have specifically dropped the names from the questioners because that is exactly who asked it. You got that one right. I think that was the only answer the only question that we've had with a right answer. So once again, Tron, Klaus, you guys have been absolutely incredible. Everyone in the audience is taking home invaluable insight from two industry leaders in their own respective regards. You guys have had a plethora of experiences, differentiated experiences, and the combined conversation with you two today has really been incredible to listen to. For those that have tuned in late, this is going to be posted on our YouTube channel, Security Token Market. And I would love to give Tron and Klaus both the chance to tell you where you can find them before we move into our token trivia section. So let's kick it over to Tron so you don't lose him.
Okay, I wanted to mention two things. Alpha Point, which is a white label trading platform, does support Ravencoin. They added that a few years ago. So I just wanted to throw that out there. And then also just so everybody's aware, Ravencoin does have some special kind of like capabilities built in for issuers of specifically of security tokens. There's restricted assets. They always start with a $sign. And those give kind of some superpowers to the issuer, including freezing trading and things like that, freezing trading on chain and things like that. That specifically built, and also tagging and the ability to make sure it won't go to an address that isn't potentially tagged the way you wanted it to, like KYC'd or accredited, and that can change over time as well with your token. So that kind of makes Ravencoin one of the better tokens specifically for securities. So, and to throw that out there, you can reach me. I have open DMs at Tron Black. So I'm also on here as Tron number 2687. I think I'm on Telegram as Raventron. So you can reach me at any time. If you're interested in Ravencoin, you can go to ravencoin.foundation, and it branches out into all kinds of places. The foundation is really there to support the ecosystem. It's not really in charge of anything. It's just there as a support mechanism for Ravencoin, and I'm happy to put other people's project listed specifically on there, and also talk about them through the Ravencoin Foundation Twitter account. Let people know what you're working on. So
thank you for that, Tron. And Klaus, where can we find you?
Yeah, I'm also easy to reach. You can reach me here on Discord, on Twitter, on my personal email, cs@digicast.io. So yeah, easy to reach. I'm also on Telegram. We have a Telegram group.
Perfect. Two industry leaders that make themselves open to their communities and the blockchain community at large. So do not hesitate to reach out with any questions, comments, or concerns with any of their products. Hopefully there's not any concerns, because I frankly can't think of any. This has been an incredible AMA. If you guys have any additional questions that weren't covered, feel free to send them to me or them, and we'll make sure we get those answered for you. Again, I'm Jackson Blau, Community Manager here at Security Token Market, and I want to thank all of you guys in the crowd for being here with us as well. For those of you with us, we are going to move over to our Token Trivia text channel now and hold a Token Trivia competition. I apologize. The winner of Token Trivia, if you're able to beat the team, will take home an STM swag pack. And so this theme of Token Trivia this week is going to be on our featured community members. So if you're interested in participating, I will move over to that channel right now.